Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And look who's in the podcast today. It's James Eng, the professor. How are you?
Great. Thanks for having me, Paul.
James, as you know, has been underwriting and originating loans for a long period of time. If you know James, you know that he knows his stuff. If you've ever watched him on his YouTube channel, he does a great job of explaining how apartment loans and real estate loans and all kinds of different financial tools work, whether it's a bridge loan or it's a Fannie Mae loan. He has a great channel. Talk to me just real briefly, James, a little bit about your passion for education.
Yeah, I mean, I think a lot of times that's where it starts, right? People get into this business. That's how I got into this business really in 2014, 2015, listening to podcasts, watching YouTube, watching webinars. And I think that's just how you learn. And that's how a lot of people have connected with me in that, I like teaching about how to make the best investment decision. So whether it's on debt, whether it's on equity, whether it's on property management, sort of figuring out all the team players that you need and making the best decision. And so some of the recent webinars that I've been doing have been focused around bridge lending and what I'm seeing in the market. And a lot of times people, they just don't know what they don't know. And so I try to give you a taste of that. Usually in a 15, 20-minute video, I can't give you everything, but I try to get you thinking about some of these items, whether you're a passive investor or a general partner, and sort of how these deals are put together. Because, Paul and I, we have the ability to see a lot of deals and work with a lot of investors, and they're trying to put these deals together in real time, right? So in market conditions, and things change, equity changes, debt changes, and you have to be able to sort of work through those items. And, you might have did a deal a year ago or 18 months ago, and the market's completely changed in terms of what you need to know. And so that's why I try to keep people up to date on what we're seeing in order to, prepare them so that when they get under contract and they get 300,000 hard day one, they're ready to go.
Yeah, I think James has hit the nail on the head. When you talk about doing transactions, we do hundreds of millions of dollars of apartment loans a quarter. So if you've done one, whether it's a $10 or $15 million transaction, or if it was a $1 million transaction, and you did it 6 months ago or a year ago, you're stale dated a little bit today and kind of trying to figure out where the markets are at and what the hot buttons are. Talk with guys like the group at Old Capital, and I'm going to promote us because I don't do that very often, to kind of help you give you an idea about what's going on today in the market. So, we try to give you the best education possible. And what we're trying to do is give you a little bit more of a sense about what's going on around the nation in different markets. So last month we had a gentleman from Atlanta, and I thought he did a great job of kind of explaining what the advantage is for buying an apartment building in Atlanta. Tremendous growth in Atlanta, freight coming in, railroads coming in from the port, new technology, biotechnology, Georgia Tech, all kinds of things that are going on that are very positive for Georgia, very much more positive for Atlanta. And one of the things I thought that was mentioned either on that podcast or maybe it was afterwards, one of the things that James has said is that you learn more about your market when you compare and contrast other markets, And so what we're trying to do is give you a sense of comparing and contrasting the market that we're featuring or hosting and compare it to your market, wherever you live, and kind of give you a kind of a sense about what's good and what's bad about your market, what's good and bad about the markets outside of your comfort zone or what your area. So let's talk a little bit about who we have on today, James, and a little bit about your conversation.
Yeah, so we brought on Adam Klink with Capstone in Nashville. and he's been at Capstone for 7 or 8 years. And he has sold a number of deals, all the way from Class A deals all the way to Class C deals in Nashville, Tennessee market. And we brought him on to really talk about what he's seeing in that market. And so, what I like about Nashville is just, it seems like a mini Austin, and growing just as quick and has a lot of the same dynamics. But then the same way that you come to Dallas, I asked them the question around, all right, I fly into Nashville airport and you drive me downtown. And then sort of what sort of circles do I start doing around where's the A properties, where's the B properties, where's the C properties, what submarkets do we want to be in, which ones do we have a little bit more challenging demographics and maybe not want to go into as a first-time buyer. And so we cover those things. And then we also talk about some of the transactions that he's recently done around maybe taking a hotel motel that was built in the 60s and converting that to multifamily, and some of the challenges that might come with that, but then also the upside.
What I liked about this interview is really Adam himself and some of his experience level. And I don't know if you heard this or it was, but he's a licensed pilot, which is pretty good. I certainly do like that. He's a marathoner. He's done the Boston Marathon. And he climbs mountains. He has been in the NASCAR pit crew. So just a very diverse background. And he spent summers up in the Bering Sea on fishing boats. This is all when he was going to school at Michigan State, getting his undergraduate degree. And he graduated on the top of the class. I graduated in the bottom of the class. He happened to graduate on the top of the class. So I listen to guys that have graduated on the top of the class, just like James Eng.
Yeah. And I mean, I think what's unique is, when you're learning about these markets is that, understanding which way the path of growth is, understanding what they're seeing in those markets. And then a lot of times when you're comparing, contrasting these markets, you feel like when I'm sitting here in Dallas and prices have gone from 30 a door to 100 a door for a B-C deal, but then I talk to somebody in Nashville and it's the same price or 25,000 or 30,000 a unit higher. So it doesn't sound as bad in Dallas. So no. A lot of times you just have to get a national feel for what other markets are doing and, see the benefits in yours and sort of compare and contrast those.
Yeah. So without further ado, let's go to the interview with Adam, with Clank, with Capstone, and James. Listen real carefully if you can about what's going on in Nashville. If you've never been to Nashville, I agree with James. It's kind of a mini Austin. Very young kids there trying to make their way in the music business, but also they have Belmont University there, Vanderbilt University, just some of these wonderful, very special colleges and universities. If you can make it there, you can make it anywhere, not just New York, but in Nashville, Tennessee. So let's listen to James' podcast, the interview with Adam Clank.
All right. This is James Eng with Volt Capital, and we're here with Clay Allen of Volt Capital in our Atlanta office and Adam Clank out of the Nashville office for Capstone. So Adam, thanks for joining us today. We're going to talk about the Nashville market and sort of what you're seeing and recent deals that you've closed, but wanted to start off and just give people a little bit of your background and how you got started in the business.
Yeah, thanks, James. I really appreciate the opportunity to chat with you guys. So yeah, my background really after college, I joined, I did not take the conventional real estate route. I actually joined one of the world's largest construction and engineering companies called the Bechtel Group. I worked on numerous projects with them, around the country, around the world for 5 years. Started to invest in real estate on the side, and then eventually realized my passion was in real estate and, quit that job to move to Nashville and open the office for Capstone. So now I guess I've been at Capstone and in Nashville for 7 years now.
And maybe touch briefly, because I saw on your LinkedIn, you've been working in the ski world, the NASCAR world, the fishing world. Just touch very briefly on that, just to give people an idea.
Yeah, it's certainly an unconventional route, but I had some unique experiences. Used to work in the Bering Sea on fishing boats back in college. You guys have probably all seen the Deadliest Catch, and I actually was not on that show. Didn't do that type of fishing, but very similar to that. But we did some work in NASCAR pit crews in high school. Worked at Vail Resorts, teaching ski lessons. So tried to get a good experience of what's available out there. And, that's what has led me to real estate.
Yeah, I was at the Texas Motor Speedway over here probably a couple years ago, and it blew me away at how fast those cars go. So can't imagine being on a pit crew on one of those spots. But let's jump back into multifamily and maybe give people an idea of sort of what your team covers, sort of markets that you cover, and then we'll dive into a couple of these and give people an update on what you're seeing.
Yeah, absolutely. So I assume quite a few your listeners know about Capstone. We're now the country's largest private apartment brokerage, offices all throughout the Southeast. Recently opened 2 in Oklahoma and also 2 in Colorado. But out of the Nashville office, we have a team of 7 here focused primarily on Kentucky, Tennessee, and into Alabama. And we really focus on anything residential. Our bread and butter is, value add multifamily, but we also sell quite a few apartment development sites, large tract, single family development sites, single family home sites, and everything in between.
All right, Clay, I'll kick it over to you. You're in the Southeast along with Adam. Maybe start going through some of the major markets here that Adam is in.
Yeah, so Adam, just kicking it off here, I think you're based here in Nashville, and that is a hot market. A lot of attention has been given to Nashville over the past 3, 4, 5 years, especially so today. What makes Nashville such a hot market for multifamily?
Yeah, well, I think it's just the job growth. I mean, it seems like, my 7 years here, every few months, I've heard a new, very impressive job announcement. It started off announcements at, General Motors in Spring Hill and Mars Pet Care, and more recently Amazon, and not only the large operation Center for Excellence that's been announced about 2 years ago, which will bring 6,500 jobs, but they've popped up these, their warehouses in many of our submarkets, which, each one of those employing a few hundred, well-paying jobs. There's been a Facebook data center that recently was announced in Gallatin. I think overall what happens is many people come to Nashville for the tourism and the fun. My way of, saying it is, I think a lot of people come for a Broadway weekend and end up staying for a lifetime. I think, it's tailored towards a young demographic. It's kind of like, Vegas, but not. Yeah, I think people come for a fun weekend. They realize, it would be a great option for them to relocate to, whether it's after high school, after college. And I think that's really what drives a lot of the in-migration that we see.
Hey, Adam, I was going to jump in real quick, Clay. So imagine I fly from Dallas, get into Nashville, sort of land at the airport. That's sort of I pull up a map on the east side of town, and then I drive into downtown. If I was going to jump in the car with you, how would you sort of give people a lay of the land of Nashville? In terms of where's most of the new development, sort of A, B, and C class, and just sort of give us a lay of the land if you could.
Yeah, so most of the office jobs are concentrated in the downtown area, and downtown's always been the main, CBD. Mostly, white collar employment has been right outside of downtown. I'd say 10 years ago, there's an area that was created called the Gulch. Essentially, it's the strip of land between the highway, the loop that goes around the city, and the railroad track. So, the Gulch is the, more the high end, even maybe, young millennial type of place to live and work. That's where you've seen more high-rise development than anywhere in Nashville. But as far as outside of that, the other concentrations of office jobs are in Cool Springs, I'd say, in Brentwood. So really anywhere downtown, kind of moving south down I-65, out down that I-65 corridor, you have Green Hills, you have Brentwood, you have Cool Springs and Franklin, and you continue on to to Spring Hill. But that's where most of the employment is concentrated. In my experience, fewer jobs have been created on the other side of the river and then north of downtown. So I think that will change in the very near future. There's been a lot of conversation recently about potential Oracle announcement and relocation to Nashville, which would bring a few thousand jobs, and it's reported that would likely end up in a new master plan development called River North. That's directly on the other side of the river from kind of Broadway and downtown. And I think that would really help be a catalyst of more office, and then new apartment development on that side of the river, and then even the trickle down effect of your lower priced surface park deals, further in those suburbs in Madison and Hendersonville and Gallatin, up as you move north on 65.
Okay, so you fly in, drop in, go downtown. That's where most of the jobs are. Then you go a little bit further south. You said the Gulch.
Correct.
So that's sort of inside of sort of that 65 and 40 intersection. And then you go out 65, and that goes out to Brentwood and Franklin, which I think Dave Ramsey's out there in Franklin, right? So, Okay. And then so most of the jobs are along 65 in that corridor out that way.
Yeah, I would say obviously the other main highway leaving Nashville would be 24, which heads to the southeast. That goes through Antioch and Smyrna and Murfreesboro. Ironically, Murfreesboro might be a lesser known city, but it's actually been the fastest growing city in Tennessee. Many of the last few years, even above Nashville. And so I think it used to be more of a submarket of Nashville. Now it's, it can really, hold its own and stand on its own.
Okay. Here in Dallas right now, I would say pricing is around, let's call it 200 a door for A, 150 a door for B, and then around 100 a door for C. What sort of rough pricing in the Nashville market right now for those classes?
Yeah, so Class A, whether we're talking, when I say Class A, I'm thinking anything, obviously new construction, but also, 200, 250 plus units, include surface park and high rise. But I think you're between 245 a unit and 325 a unit. Cap rates anywhere between a 4 to 4.5 cap. Class B, I would say, is 150,000 per unit up to 200 a unit. Around a 4.25 cap up to 4.75. Class C, 85,000 unit up to 150 a unit, and then you're, high 4 cap, low 5 cap. And if you can, find any deal at that 85,000 unit range, like I mentioned in Nashville, you've done yourself well. I mean, I think it's, you'd be hard pressed to find any deal of good scale for less than $100,000 a unit, really anywhere in Nashville.
So on that note, I'm curious, Nashville's seen a lot of investment, and those are pretty pricey prices, if you will, just like some of these major markets. What about some of the outlier cities, Knoxville, Chattanooga, maybe Memphis? What are you seeing there?
Yeah, it's with interest rates as low as they've been recently, you're pretty close to those. Obviously, I think when I get most incoming calls to groups looking for to move into the southeast from the west coast to the northeast, I think primarily they're looking to come to Nashville. After Nashville, the next tier I'd say is Louisville and Chattanooga. Then the next tier is probably in Knoxville and Lexington. If we want to bring Alabama into the mix, I would say that's right up there with Nashville. Nowadays we get just as many calls for people looking for deals in Huntsville. Birmingham is probably a little bit bigger of a market, but it's a little bit less attractive at the moment. But your cap rates, I'd say you're probably 50 basis points higher in any of those markets than Nashville. But we just took a deal to market in Knoxville, 180 units, Cardinal Construction deal. Current ownership had it for 4 or 5 years. Really there have been no systematic upgrades to the property. And it's, we received, I think, 22 offers, had 18 tours, and that'll trade right at a 5 cap on in-place income.
Wow.
So it's pretty tight.
That is. So, and you mentioned it a minute ago, but Northeast money, California money, who's buying? Let's come back to Nashville. Who's buying in Nashville right now?
It's really everyone. I mean, I can't specify exactly, one type of buyer. I think you have, high net worth individuals who want to not only relocate their investments from the West Coast into Nashville, but I could probably name 5 individuals who've actually picked up their lives, their families, and moved here. They own apartments probably throughout the country, but they want to focus on the southeast, and have decided to physically move their lives out here. And I think it's just pretty similar throughout all the other markets as far as product type. I mean, if you're talking a $70 million deal, it'll be certainly more institutional. And I think every deal has a different buyer type, and sometimes you can find them the more high net worth mom and pop individual that's willing to pay more. If it's say sub $20 million deal out there. They're willing to pay more than the typical, private equity group who would be selling to.
Got it. So for someone coming outside of Nashville, wanting to break into the city, to the metro, what areas would you kind of point them to, and what areas would you say don't look in this area?
So I get the question a lot. I mean, as far as areas to avoid, this is you might not believe it, but there's really nowhere. I mean, and there's no place in Nashville that I would advise against buying real estate. And I think it's just because Nashville is growing at such a rapid pace. The employment coming into town is happening at such a rapid pace. It's really just kind of bursting at the seams. And and you see new development, whether it's apartment, single family, home development, or retail. It's really in every submarket. Now, as far as demographics go, I mean, south of Nashville, you have the strongest demographics as far as income and education. I'd say Green Hills area, Brentwood area, down into Williamson County, primarily Franklin and Cool Springs. I think typically what happens, a lot of millennials or whoever move to Nashville for jobs, they start a family and then they move down south, probably into Williamson County for a little bit, slower lifestyle, larger tracts of land. And there are a lot of new jobs in the Cool Springs area as well. But I will say, Antioch, for example, is about 15, 20 minutes outside of Nashville, down on 24. 7 years ago, you couldn't get that much interest in Antioch. Now, not only does everyone want to buy in Antioch, but you can't find land to redevelop for new apartments either. I'd say there's probably 5,000 new units that have either been developed or under construction now in the past 5 years in that submarket.
Yeah, and on that note, I mean, a lot of construction. With that said, how are people underwriting deals? When let's say a value add deal, Class B, are they having to contend with concessions with the new stuff, or how would you approach that if you're buying a deal?
I mean, it's a moving target right now with I think hopefully coming out of COVID and these restrictions being loosened. I think for the past year, we had our best year that we've ever had. I mean, people are still buying deals. We never had anything follow the contract. That being said, I don't know how much income growth and rent growth was being underwritten. I'd say in the past few months, you're seeing quite a bit more rent growth being underwritten. Concessions, I think concessions have probably held consistent. I think there were more concessions being offered, I'd say in the middle of summer last year, when there was much more uncertainty. I think now, the combination of COVID and new employment coming to town, that I think you're seeing concessions going away. As far as downtown Nashville and the core, there's still quite a bit of a concession being offered at the current time. But I think it's just a short blip, and by mid-spring here, I think we'll be just like we were before COVID.
Yeah, Adam, I saw that you recently closed a hotel to multifamily conversion, and this seems to be a new hot category. And so maybe talk about that deal, sort of, price point, roughly sort of where it was at in terms of rehab that needed to be done to convert this over, and then sort of what type of buyer or buyers were looking at that type of deal, because we're seeing that a little bit more here in Texas for some of these extended stays. So maybe talk about that deal and sort of where it's at.
Yeah, this is the second one that we've done. Actually, neither of the ones that we've done have been your extended stay types. And so they've all just been really studio conversions. And the one that you're referencing was actually in Clarksville, which is a submarket of Nashville. It's probably the furthest submarket out, about a 35, 45-minute drive outside of the city towards the northwest. But, younger entrepreneurial group really came in, bought this deal. I think it's 135 rooms. Due to the low price tag on, I think it's only around $2 million. They closed on it, closed in cash to the best of my knowledge. And they'll probably end up putting, I'd say $35,000 per room into it, per unit. They might be all in for 55, 60, and it should rent out. If they do all inclusive of utilities, probably $750, $850 a month. Clarksville in particular, they've had a lot of growth, a new convention center, Predators hockey facility announced downtown. So I think, if they chose to rent out some of the rooms as more of a, Airbnb type strategy, I assume they could, juice that income quite a bit. But as far as those opportunities go in Nashville, I get calls quite a bit from groups looking to convert. I'd say in Nashville, you can buy hotels to do this anywhere from, 50 to 150 rooms for around $45,000 a unit. Obviously you don't plan on buying it based off of in-place income, but, underwrite as buying a shell more or less. Obviously everything's in usable condition, but, and plan on putting in, $25,000 to $35,000 per room, I'd say inclusive of exterior and amenity improvements. It's something that I think is needed in Nashville with, rents have increased quite a bit over the past few years. And I think there is certainly a gap for more affordable housing, and especially with COVID and, those that are concerned and want to have their own space, it allows roommate situations to, move into their own unit that they can afford instead of, being forced to split a 2-bedroom with a roommate.
Are you seeing any other interesting things? Like we've seen some conversions happen. We've seen some of the build to rent stuff on the single family side. Is there anything else that you're seeing in that market specifically in terms of unique strategies for guys who would normally just sort of be middle of the fairway, B and C multi guys going outside the box a little bit?
The only thing that comes to mind is, well, I guess in reference to, you said the build for rent, we did recently put a site under contract in a Nashville suburb. Ironically, it's a 400 and so home detached build for rent community. It actually happens to be an opportunity zone as well, so very likely the only opportunity zone build for rent community, certainly of that scale out there. But that was a fun one to put together. But outside of getting numerous calls from developers looking for build for rent communities and townhome communities, recently we've transacted on a few properties that have been pre-sales. Now, pre-sales at different stages. So 2 of these have been deals we put under contract with developers before they've even broken ground on the project. So our buyer will come in, put $1 million or so, non-refundable, and then simply have to close that final certificate of occupancy. And, obviously they're getting a discount for that, but it allows the developer to churn through more projects. I assume it gives them more certainty and better debt from their bank as well, when they can show them a contract in hand with hard money. And we also closed on one of these last week. I think it was last week, maybe the week before, but a new construction deal, 120 units in Nashville that was already under construction. We put a buyer into it. The buyer closed prior to final certificate of occupancy with a bridge loan, and they're simply keeping a few $1 million in escrow as a completion guarantee. So I think a lot of buyers now, they're just trying to kind of find the next deal. How do we have to not compete? And just moving their way up the food chain, and instead of waiting for a deal to get stabilized, we'll buy them pre-stabilized and take a step further, we'll how about we buy it before they even break ground on it, and so I think it also helps the buyers from the standpoint of, they need $1 million or so in earnest money now, but, they have a year to kind of get their whole equity stack together, and kind of plan on maybe they want to sell a deal and 1031 into it. It just gives them more flexibility, on purchasing the asset.
Are you seeing, we're seeing this a little bit in Dallas, is investors who maybe started in the $5 to $10 million space with maybe a B or C asset, they're moving sort of up the quality curve. As you reference cap rates, it's very similar in Dallas, sort of 4 to 4.5, or even 4 to 5 is the total stack of the cap rates, right? So A, B, C. So have you seen people sort of move up the sort of quality ladder, but then have there been buyers who have done that better than others? And how are they doing that well? Because obviously sometimes it's different brokers, sometimes it's different sellers. And so you just don't have that network of people, but the equity raise is obviously bigger. But have you seen people do that, and how have they done that well?
Yeah, we've seen that quite a bit. I think groups that historically have bought, heavy value add deals, have just realized that, the repairs and maintenance and the CapEx they need to put in these properties really isn't worth the cap rate discount that they've received on the front end. And, and they can buy more deals, churn through more deals if they have less, repairs and maintenance to worry about, and focus on, how are we going to, fix up these units, or what finish level are we going to take these units to? If they can just keep buying, newer construction deals, it's less time they have to invest into each property. However, there's just as many groups that are still focusing on kind of the lower end of the food chain and have become more aggressive there. I think they've become more aggressive with terms, and it's helped some of these buyers who want to focus on the lower price products. I mean, I'd say pretty much, hard money on every deal that is, say 60s, 70s construction and older.
All right. Clay, any other questions for Adam here?
Well, I'm just curious, any other deals right now you have on the market you want to highlight, or were those two good?
Yeah. So we have one 475 units or so on the market in Memphis. The deal's been fully renovated, $15+ million in CapEx put in the property in the last 2 or 3 years. Has a pilot program in place that extends over 10 years, in the process of getting it extended up to 17 years. The one in Knoxville I mentioned, a little bit too late for most groups on that one. One on the market in Nashville, and I'd say in the next few weeks you'll see three to four more coming, through our system and to the market.
Adam, I missed on that first listing. You said there's a pilot program. Is that what you said?
Yeah, that's correct.
Can you explain that? I'm not familiar with that term.
Yeah. So pilot really stands for payment in lieu of taxes. Now, I should say it typically stands for that. In this case, the owner has worked out an agreement with the city of Memphis to, really freeze their taxes, whatever they're at today, or, when the pilot was put in place, for the next 10 years, and so they got an initial 10-year pilot program. They're 3 years into that. Now they're working through a second 10-year pilot. And so obviously it's a great, I don't know the facts right offhand. I want to say, taxes on that deal without the pilot would be, $500,000 or $600,000, post sale. Right now they're frozen at, $100,000 and some $1,000. So the savings is incredible, especially if it's locked in for the next 17 years. I mean, in that case, most groups who are looking at the deal through us now are not planning on holding it for 17 years. So I think they're really not even, taking in that adjustment in year 17 of when the tax bill really hits. But you see that quite a bit in Memphis.
So they have to rent to a certain income demographic in order to receive that. Is that right? Or is that
actually not in this case? Okay. Usually I'd say yes. If you ever hear of a pilot in Nashville or a pilot on a new construction deal, I'd say, you're right. You'd have to have certain income restrictions given the tenants. But in this case, I think why you see these in Memphis so much is because the city, has gone through rough times in the past, and they, as a means to kind of incentivize developers and buyers to come in and invest money into these properties, not only to make the financials work, but just to maybe make the deal even sweeter to get these groups to come in. They offer these pilots, and we've probably come across these similar programs on 5 or 10 deals in Memphis.
Okay. Yeah. I mean, obviously taxes are a big deal. Insurance is a big deal. I mean, those are probably two of the hardest things to project for buyers coming into Texas. And I mean, obviously if you take off that in a Memphis deal, that makes it a lot easier. So, yeah,
I mean, I think, for us, we talk about a 17-year pilot is pretty unheard of. I think usually you see a pilot, 5 years, maybe 10, I think usually, you probably couldn't get it, you couldn't justify the need for an extension. This owner in particular has been successful, and, they believe they'll be able to get this 10-year extension approved, but, you're right. I mean, typically if you can remove some of the uncertainties, it's is in the best interest of certainly the buyer at a time of sale to do that.
In terms of underwriting, is there anything specific that new investors should be wary of sort of when they're coming in underwriting deals in Nashville?
No, nothing that I can think of. Obviously, we're far enough south that you don't need to, take into account any, snow removal or salt, things like that. This year we did get a bad snowstorm 1 week, and, it really just shuts down the city. It's nothing where owners, take the expense to, remove the snow or anything, because it'll melt, quick enough. But, there's really nothing out of the ordinary, that you wouldn't have to encounter in any other market.
Okay.
I take that back. Recently Nashville has gone through quite a bit of adjustments in taxes. A few, I think it was 2 years ago, we had a citywide, the reassessment. or countywide reassessment, and that increased values of properties quite a bit. And it was a big shock to homeowners, apartment owners. And so we just got through that. And then about last year, we had that big tornado that came through Nashville. That was devastating to, Germantown and cut right across the river into East Nashville. Quite a few, I'd say 3 or 4 good sized apartment communities were, damaged to the extent that they had to be fully, evacuated. Tenants had to find new homes. They've gone through essentially full kind of redevelopments of those communities. And now they're going through lease up now. So that has resulted in higher insurance costs, primarily in, the downtown area. Do I ever think a tornado like that will hit downtown Nashville again? Probably not. I think it was a, very rare occurrence, but, nonetheless, it's certainly impacting insurance costs. And the last is, I mentioned taxes and the reassessment a few years back. Well, just recently there's a very large increase in millage rates. So our millage rate recently went up to 4.22% in Nashville and Davidson County. And, the combination of, from the city, a combination of funds to help repair the city after the tornado. And then obviously, what's expected, deficits that are expected to come, on the heels of COVID.
All right. Clay, any other questions here for Adam while we have him?
No other questions. I would just encourage everyone to go to capstone-companies.com, go check out his bio, focus on that last paragraph, because if you're like me, you will think that he's jockeying to be the Dos Equis most interesting man in the world, I think. But really, really cool bio, Adam. Great discussion here. I appreciate it.
Adam, what's the best way for people to reach out to you if they have any questions about the Nashville market or any of the listings on the website?
Yeah, absolutely. Our website's one of the best places to start. If you want to reach me directly, email address is adam@capstone-companies, COMPANIES.com. And we can connect that way and follow our Instagram. We also started a podcast recently, so join that as well, and you can listen to some of the Capstone team members interview respected multifamily owners.
All right. Thanks a lot, Adam.
Thanks,
guys. Appreciate your time.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.